Great. Well, thank you very much, and thank you all for being here. As you just heard, this is a panel on crypto and payments. I think there was one yesterday as well, which had a bit more of an incumbent flavor. It was sort of the major payments infrastructure providers talking about how they're going to innovate. I think today we have a bit more the challengers, the innovators, people who are going to talk about it from their point of view. I'm Andrew Whitworth. I'm an executive in residence at GDF, Global Digital Finance, which is the Global Trade Association for Digital Assets and policy. I'm also a consultant and academic in crypto and blockchain policy around the world. I think we should do a round of introductions and then get started.
Hi, I'm Jess Houlgrave. I'm the CEO at WalletConnect. This is a topic close to my heart because before this role, I was at Checkout.com, so I've seen both sides of the table when it comes to payments. WalletConnect is a protocol that's been around since 2018. It connects apps and wallets, so you can think of it like a two-sided network. We have about 700 different wallets and about 70,000 different apps that are on the network. Everything from DeFi all the way through to payments companies. We process about $400 billion a year through the network. And payments is probably our fastest growing segment. So excited to chat.
Great, Axel.
Hi, so I'm Axel, the CEO and founder of Kulipa. Kulipa is a crypto card issuer, so at the heart of payments. Our goal is to enable wallets and probably stablecoin fintechs to issue their own cards with their own brands so that they can enable day-to-day payment with stablecoins and crypto for their users.
Hello, my name is Juan Jiménez, or JJ. I work for digital policy at Santander, certainly not the chairman, as they state there. I've been promoted, guys, no, come on. I'm the chairman, actually, of the advisory board for Alastria, which is a non-for-profit blockchain organization in Spain. But I'm here acting in the Santander capacity, and thank you for having me.
Yeah, hi, I'm Andrew. I'm the Chief Revenue Officer at One.io. We're a global fintech with two main propositions. We have One.io Fusion, which is our digital asset OTC desk, so a full institutional crypto offering there. And then we have One.io Connect, which is our global payments and banking network. So yeah, very excited for this chat because we really do sit at the precipice of both crypto and payments.
Great. Well, thank you very much. So to kick things off, Jess, could you maybe tell us what you're seeing in the market, how you're seeing it develop both in terms of products, volumes, and kind of what it looks like to WalletConnect right now?
So I think payments is an interesting one because ever since the Bitcoin white paper, we've been talking about blockchains as a way of taking over payments, right? The Bitcoin white paper was a peer-to-peer cash settlement. That was the title. And so for everybody, for a really long time, everyone's been saying crypto is going to have product market fit in payments. But I think a lot of the misconception comes when you realize that payments isn't just about the settlement of value, which a blockchain is really great for transmitting value, but a payment has all sorts of other things that go with it. It's got a load of regulatory things. It's got travel rule compliance for some payments. It has restrictions. It has different kinds of information being transmitted between the recipient and the sender of that payment. And so it's taken us a while as an industry to realize what we need and the infrastructure that we've got to build around it to make crypto payments actually a thing. And I think we've started really in the last few years to see that come to fruition. There are also all sorts of different types of payments. Obviously, we think initially when we think of a payment, we think of either an in-store payment at point of sale or an e-commerce payment. But actually, there's also all sorts of other things in terms of recurring payments, which are probably one of the biggest segments for online companies especially. So your subscriptions, buying your Netflix every month. And also payouts, I think, is one of the fastest growing spaces as well. So being able to, if you're a creator on a creator marketplace, being able to get paid for that. And I think we're starting to see crypto actually tap into all of these segments at different rates. And even just yesterday, we had several of our customers launching new payments products. MoonPay launched MoonPay Commerce. which allows people to pay with crypto at merchants using MoonPay. Coinbase launched their new business product, which has both payouts and pay by link with crypto. We saw Square launch Bitcoin payments at point of sale. So even just in the last 24 hours, we've seen really big news in terms of crypto payments. And at WalletConnect, over the last 6 months, those payment-specific volumes have been growing more than 100% month on month. So really, really fast growth. I think there's still a lot of issues and things to fix, but it definitely feels real rather than proof of concept now.
Yeah, good, and very good timing for the launches of these products and services, right, EBC. Axel, could we maybe unpack a bit what we mean by crypto payments? Are we talking about a crypto leg on a traditional journey? Is it just an infrastructure upgrade? Are you seeing end-to-end payments and value being held also in crypto?
I guess it depends on the use case. You have a lot of use cases where the stablecoin sandwich is still the norm, and people just use stablecoin in the middle to just accelerate and avoid all of the traditional SWIFT correspondent banking hoops. But we more and more see people holding. I think it's also a geographical elements. In emerging markets, for example, we are very active in Argentina, in Nigeria, where people do hold stablecoin as a store of value because that's their almost only way to hold dollars or like more stable currencies that they own. So we see a lot of that through remittance, people receiving stablecoin and keeping it, and that's what also makes the card payments very much useful in a sense that people hold it and want to be able to use it for their daily spend. And so indeed, we are moving from a very, very on and off ramp world to a world where people realize that keeping stablecoin is potentially also a way to keep that value. And there are even merchants that are receiving payment in stablecoins and that will, instead of off-ramping to their own bank account, will pay their own suppliers in stablecoin. So more and more the ecosystem, because all of the elements of the chain of value in payments are slowly coming into place. It is now possible to really do fully on-chain payments. And that's what's enabling the real value of the blockchain and these payments, making it end-to-end efficient and user-friendly also, because there's a level of it has to be as simple as making a normal transfer.
Yeah, and I'm picking up on that point around on-off ramping or on-off boarding. Andrew, I understand that's at least one of your original products. Is that still one of the major roles, at least your company plays in the crypto payment space? And also, when we're talking about crypto payments, are we really just talking about stablecoins, or is there a role for other forms of cryptocurrency or crypto technology underlying it?
Yeah, it's an interesting question. So certainly when we started out back in 2017, originally it was the OTC desk, and we had a lot of clients that either held cryptocurrency and needed to get into fiat, or had fiat and needed to get it into crypto. Now, one of the biggest challenges with being able to do that was that the banking system at the time was sort of loath to deal with businesses that were dealing in crypto assets or dealing with crypto transactions. So sort of recognizing that was the catalyst for us as a business to pivot and actually generate our own proprietary payments network, really with the crypto use case in mind, providing an ecosystem, providing accounts to businesses or individuals that wanted to interact with digital assets in the course of running their business. Certainly for us, the original use case that we see as a B2B is merchants that ultimately deal in cross-border payments, and the crypto use case in that context has been very strong and probably much stronger than it has been in the consumer use case, which I think we're really starting to see traction on in the past sort of 12 months. Now, these are businesses, take an iGaming operator, for example, licensed, operates out of Europe, but has clients located all over the world. Now, for a number of years now, the easiest way for them to be able to transact and actually run their business, which ultimately ends up with them dealing in euros, is actually to receive payments in stable coins, cross borders, because the costs and the speed of doing so is significantly better than dealing in local currencies. So that use case has been very strong. Ultimately, as it stands today, having a fiat infrastructure that is supportive of businesses that deal in digital assets is still of vital importance. At the end of the day, most of our clients' payments still end up in fiat. You're still paying your staff in fiat, you're still paying your regulators in fiat, you're still paying your dividends in fiat. So it's really important to have that bridge and that seamless conversion of crypto into fiat or fiat into crypto for that use case specifically. But what has been really interesting to see over the past sort of 3 to 4 years is flows going the other way. So typically we saw a lot of crypto off-ramps into fiat for the use cases I've talked about, but increasingly now we're seeing the other way. So clients wanting to take fiat, convert it into crypto to then make a payment out in crypto. So you're seeing the flow go the other way. And then you're also seeing stablecoins being used to actually affect what is ultimately a fiat transaction. I've got a client right now, an ultra high net worth individual who has funds, US dollars in a US bank account, needs to make a large property purchase in Europe. We're affecting that transaction for this individual by taking his US dollars, converting it into crypto, into USDT, off-ramping it into euros, crediting the payment account we've given him for him to make the last mile payment from there. Now that's a fiat transaction, but it is enabled by blockchain technology. So it's quite an interesting question in terms of when you ask what is really a crypto payment.
Yeah, I like this. We've got the full sweep of the entire payment chain here, from sort of point of sale in the shop all the way to on-ramping from your original fiat and crypto. Juan, could you maybe give us an institutional perspective on this? Obviously, Santander has a very, well, not unique, but for this panel, unique role in this, and you within Santander have a very specific role in innovation and digital money.
Yeah, very quickly, and thank you for the question. This payments thing on a blockchain and having an on-chain mechanism to settle money, it's been a long bet. We started like in 2014 or something like that. It's been 11 years looking for the holy grail of payments. I think we started earlier than expected as an industry, not specifically as Santander, so we were not mature. And every single actor that provides some value in the payments value chain, when you look at it, we're not realizing that this was the technology of choice. I think that now, fast forward to 2025, the market is mature. We're witnessing what is happening. And from a Santander perspective, what we witness and what we believe is a multi-money future. Like there's no only one alternative or one option that is going to rule them all or winner takes it all. Is not the case, and actually we're exploring different opportunities. Our favorite one from a commercial bank perspective is of course tokenizing deposits. For us is the way to go. We're actually implementing one of these solutions in the UK. It's called RLN, the Regulated Liability Network, where you have a wholesale token where you can exchange money from bank to bank in the upstairs. If you look at it from a house perspective, upstairs you have the banks working and swapping the money through a wholesale CBDC. And in the downstairs, where you have to touch on the client, whether it's a retail client or a business or a bigger customer, tokenized deposits could be the way to go because they're fungible and they're interoperable. Because at the end of the day, it's real money. It's a claim against the deposit base. So these type of solutions, UK is quite advanced, and but this solution is also present in other projects that we're running. Agora, maybe you're familiar with this BIS, the Basel is promoting this one, and Santander is part of the banks. It deals with 7 different geographies. It's quite of a challenge, but it's operating and it would be working in 6 months' time or something like that. Now, and coming back to this multi-money opportunity, we're also, of course, exploring the stablecoin world, where regulation is key, and there's been lots of advances. We look at the US market and we see Genius Act being passed. Still not the final touch on Genius, but is there. And when you look at it, it's super favorable to the stablecoin world. And in order to bring a global monetary asset to the ecosystem that is on-chain and it interoperates from one jurisdiction to the other, what we need now is equivalence with MiCA, which is actually not the case. We don't have it. And as a global bank, we need equivalence and proportionality. When you look at MiCA, totally different approach. There are limits. There's no clear licensing. You have some, there's no payment stablecoin in itself. You know, Mika is more focused in taxonomies, this EMT, ART, and the rest. And the last point would be the multi-issuer, which has been a hurdle right now. But hopefully we can get equivalence and really play on a global asset and seek for global liquidity, because we know from the traditional finance that the global assets, they look for liquidity, they find their way, and if you put barriers, it makes no sense.
That's great, and thank you for opening up many different angles of the conversation. I think we'll come on to the regulation in a second. When thinking about sort of future mix of money, I mean, I agree there's going to be public money, private money, digital and physical, or on-chain, off-chain, however you want to phrase it. The important thing there is interoperability. Now, one part of that is technological, which perhaps we can talk about later. But I think where you discuss the jurisdictional questions around, well, Genius Mika is one obvious thing, but also the developed economies versus developing economies or global south, I think it's very, well, obviously they need to have interoperable regulatory frameworks. Axel, I don't know whether you mentioned this yourself. I don't know if you have anything you want to sort of deepen on that.
Yeah, we do. I mean, if we're based in Europe, we quickly realized that there was a huge opportunity, and I mean, generally people needing these stablecoins for their daily life, because they get paid in stablecoin as freelancers working for US companies in Argentina. They receive money from their family in stablecoin. And it has become, I mean, to give a number, Nigeria is a very specific market, but 80% of the people that could get a bank account, so 15 years and older, even if 15 is probably young to get a bank account, but for people 15 years and older, 80% of people have touched crypto or hold crypto, and that's part of their day-to-day life. You have WhatsApp bots that are just enabling you to, you want to convert 100 USDT to Naira. It gives you a rate, and you just approve, and you get an address where you can send your USDT for conversion, and it's instantly available in your bank account. So it is a reality, and people are really using it. And talking about regulation, there is no regulation on stablecoin in Nigeria. It was banned, and 2 years ago, the SEC started regulating more like investment-focused crypto. The Central Bank of Nigeria still officially says SEC is the regulator for investment products. So I don't know about crypto, but what it means is that none of the banks in Nigeria have done anything. They're too scared. We are reliably informed that regulation is coming, is going to be published in Q4 and applicable as of Q1. So all of the banks who are also informed have started working on it, and it's going to unlock a lot of potential, and also giving them the right tools to be able to fight against all of these Chinese or fintechs that have started developing their own product here, even if it was not really legal. I mean, Morocco is coming with a regulation, a stablecoin regulation. Argentina has done it already. I mean, Milei was quite clear about the fact that he didn't really care about the peso, and a dollarized country was not an issue for him. Nigeria is probably a bit more scared of getting dollarized, because of even if there's a Nigerian stablecoin, people don't really want to hold. That's one of the big challenges in this market, is that it is removing the capacity of the central bank to manage their own currency, and so it gives potentially a bit too much power to the people to decide what they want to hold, because they can now hold very easily dollars rather than their own currency, and it will probably have an impact on their own economy. But short term, it's a dire need for them.
Yeah, spoken like a true Democrat. It's interesting, right? Because I mean, it's not just a question of monetary sovereignty; it's also questions of exchange controls and sort of domestic industrial policy or economic policy. And then we have the question of multi-issuance, which Juan raised earlier, in terms of, well, that is part of that is a fear of dollarization of the European economy, but also then of capital flight. So these are not just questions of regulation in terms of what kind of market do we want or what rules do we want to put on stablecoin issuers. These are fundamental questions of state power capacity, the relationship between the individual and the state. with that said, Jess, is there any hope for regulation to support the industry and maybe even globally?
Yeah, I mean, I think it's a very on the same line of thought that I read something that the UK is proposing that individuals can hold only between 10 and 20,000 pounds worth of stable coins. And when you say things like that, anybody who knows anything about this stuff tends to laugh, because how on earth do you in practice enforce that and make that happen? And I think that is the key here, which is that I don't think regulators have a choice right now. I think if a regulator is not doing something to at least understand and figure out how to make this work, they're burying their heads in the sand, and they're going to have a very rude awakening when they realize that the horse has kind of left the stable. Are regulators doing that? I think it really varies, but I really think that we'll see over the next couple of years regulators realizing that they absolutely need to do something. Because as you say, this isn't just about regulation or consumer protection. It's really about like sovereignty of your currency and how you think about your economy. I do think that there's a lot of difference globally from a regulatory perspective. I think that's actually really positive because whilst I think we're seeing all of these different kinds of experiments, we've been seeing that for a really long time in crypto. Even 5-6 years ago, Singapore was talking about how we think about stable coins. So I think all of that is going to hopefully lead to some convergence. And the most important thing, I think, certainly as somebody who's building products in this industry, is clarity. And we can, as an industry, we can work with regulation. Most people are very prepared to do that and willing to do that. It's really hard to do if the regulation isn't clear. So I think the most positive thing that we've been seeing recently is that at least we're starting to get a little bit more clarity. It might not be the regulation that we necessarily want to see, but at least there's more active engagement from regulators rather than this idea of, it doesn't exist and we're going to shut it down.
Yeah, when I worked in house, I used to get in trouble because I'd say that what we need is regulation. It almost doesn't matter what the regulation is, and I got told no, it does matter what the regulation is. Like it can come out wrong. So yeah, I take your caveat. But then, okay, so that's sort of the role of regulation. I mean, in general, domestically, how it develops markets. Andrew, can you talk a little bit about, whether there'll be any convergence or sort of perhaps standard setting at the international level, how this can be managed at the international level between different regions, on the sort of market structural side, but also perhaps on the AML, travel rules, sort of the thing which actually can enable the cross-border payments that we're talking about here.
Yeah, I think it's interesting. I mean, we obviously sit on both sides of the fence. We have regulated payments firms that provide payment services, and we have regulated VASPs that onboard clients for crypto trading services. And these days, to be honest, with a lot of the new regimes on the VASP side, from a AML, KYB perspective, the onboarding standards look quite similar, whether you're onboarding the client for payment services or you're onboarding the client as a client of your VASP. In terms of due diligence that you're doing or enhanced due diligence you're doing, it looks quite similar between the two. And I think that's a good thing in terms of building trust in the digital asset system and convergence between TradFi and digital asset economy. In terms of the travel rule, I mean, we could have a whole session in terms of the difficulties around the travel rule in terms of adoptability, implementation of the travel rule, and then enforceability as well. But by and large, I think, from an ambitious perspective, it aims to achieve what we all want in terms of better clarity across jurisdictions and building trust, again, in the digital asset ecosystem so that TradFi and Tier 1 institutions have more confidence in VASPs and digital asset businesses, which then enhances their ability to actually want to engage with these businesses, bank these businesses, and facilitate transactions that have a digital asset nexus. So I think directionally it's heading in the right direction. I think in terms of travel rule adoption, we are getting to a point where there is a critical mass of jurisdictions that are adopting the travel rule in some way, shape, or form. I think enforcement will remain a challenge on that, but I think we are getting to a world now where there is more clarity and there is starting to be more convergence between TradFi and digital assets.
Yeah, thank you. And then, so, I mean, we've had a bunch of, well, you've all said where you see the world today, how you think it's going to develop, and thrown out a bunch of challenges. Juan, are there any in particular, I mean, this may be a bit of a chicken egg question, but do we need to solve the regulation before we can get the global markets? Is it possible for either TradFi institutions or new players in this space to develop their products and kind of around the regulation as it exists today? Because if we have to wait either for domestic regulation or for global coordination regulation, it's going to be a long time. And incumbents do very well out of that, but maybe we don't get all the innovation we could get.
Yeah, well, as a global institution, we've been always pursuing for multilateralism. That is totally over in these days in a fragmented world that we live in. So if it's not multilateralism, should be bilateralism at least. There are certain bodies that look for harmonization as the FSB, but they have a very, very hard work to do these days. And we understand totally. So at least if we get some equivalence and proportionality from a bilateral perspective with the US, that is leading the market, of course, in terms of monetary supply. And when you look at certain instruments like stable coins, they're purely, mostly denominated in US dollars, like 99% of the market. We need some harmonization there. As I said before, these are global assets. But in terms of challenges, I would say fungibility is one. If as I come from a capital markets career, and I've been in the trading floor most of my life, you look at instruments from a seniority perspective, and when you look at money these days, I tend to think of different wrappers, different risk, different seniority. And when you look at the tokenized deposits go with the rating label of the institution that tokenized. So this is one. When you look at the stable coins, you look at them, and it depends on the type of reserve and the composition of reserve they have. When you look at another instrument as a CBDC, well, this comes with the seal of the central bank, but depending on which central bank, there's no such a risk-free asset anymore. So there are different risks, and what we don't want, no one here in this community, of course, but neither in the traditional finance, is people trading money depending on the risk. So fungibility and interoperability is the name of a game. And there are certain ideas out there. I recommend to the audience to look at the UBIX paper. This UBIX company is amazing because what they want to do is to orchestrate all this mess and all this fragmentation again. Our friend Tony McLaughlin is doing an amazing job in his ex-city days now. But yeah, he's nailing it. Like, look, there's an opportunity there to stitch it all together. And I think this one is going to bring the real on-chain mechanism that all the tokenization world is expecting and is awaiting for. When you look at the tokenized securities, would love to do more. Would love to really industrialize this practice. But the reality is that we did several issuances. You know, we started in like 2018, 2019. We discovered that there was a nice opportunity to tackle the market there, but there hasn't been any industrialization because there's no on-chain instrument. So this is a chicken and egg thing. We'd love to have something, you know, to start settling the money in a proper and efficient way, managing our liquidity in a better way, and of course providing a better service to clients, which at the end of the day is our mandate.
Yeah, I don't know. I want to ask a question about stablecoins, but the world has had enough stablecoin panels, and this is about crypto and payments, so we'll stick with it. As we're sort of coming towards the end, I've got a question for all of you, or open to whoever wants to answer. What's the end goal here? What is the end goal of crypto and payments? Are we talking about mainstreaming it so that in the end we just talk about payments and they have a new technological rail and it's all sort of abstracted away? Or do you see that as going to maintain from parallel payment systems, on-chain, off-chain, with some interconnections between them? Or some other hybrid? Like, what do you think the end goal is or should be? Andrew, do you want to start? Yeah,
I think certainly in the short term, I see parallel streams as being sort of the end state. So, interoperability is very key there. That's seamless fiat to crypto and also crypto to crypto between various chains. But I see a world where crypto just becomes an alternate payment method for the specific use cases where making that payment in crypto makes more sense than doing it in fiat. And in the same way that when you look at the fiat system, you've got card payments, you've got bank transfers, you've got cash, and each of those payment mechanisms can coexist in harmony, and depending on the specific use case, that'll dictate which method you choose to make that payment. I see crypto as feeding directly into that, and certainly in certain contexts, like B2B cross-border payments, or when you're talking about developing markets, perhaps you see crypto adoption being much higher than you would in a developed market where you've got a robust fiat system and you've got real-time payment networks where you can basically facilitate and do everything you need to without the need to make that transaction in digital assets. So that's what I see over the short term, and I see the percentage of crypto in terms of the overall share of payment flow increasing quite significantly and increasing rapidly over the next sort of 5 to 10 years. I think longer term, it's anyone's game. I think will blockchain become a key part of the ultimate financial infrastructure that governs us all? I think yes, but I think how we actually get there is unclear at this point. Whether it is central bank digital currencies, whether it is consortiums of tier 1 institutions that have their own tokens, whether we continue to have the stablecoin issuers that operate in the private markets with the public blockchains continuing to dominate. I think that's where I don't have the answer. But I think certainly what we're working towards the next 5 years is this sort of harmonized coexistence between fiat and digital assets.
Fair enough. Juan, do you want to-
Yeah, I think it's going to happen and resonates totally with what Andrew mentioned about the different avenues. If you break down the market a bit, it's totally different when you look at the wholesale space than rather when you look at the retail space. I know this Congress is more about B2C, so retail, but in the institutional world is really happening because it's about gaining efficiencies everywhere. And the way we settle money amongst banks is quite primitive when you look at it. And it's pretty dominated or biased by the presence of certain bodies that now they're embracing this technology. But SWIFT, for example, has been years and years and years like in a kind of a denial mode. Now, in the last Cybos, they announced that they're going to do something, but they've been doing something already from the last 5 years. I think that there is going to happen, and it's actually happening because the efficiency is amazing, what you get in terms of liquidity management. When you break it down again and you see corporate clients, like large corporates that manage liquidity around the world in different currencies, again, amazing opportunity. We have our clients yelling for that. And you know, there are certain investment banks that are already doing that, like JP Morgan with Kinexys and stuff like that. And this is really happening. It's actually happening. When you go down the line to the lower, onto smaller clients, it's totally different. There's more opportunities, more alternatives, and I see more fragmentation. And of course, if you cut it geographically, in the retail side, I see more and more adoption in emerging countries, emerging markets, where you have, you know, a lower quality way of settling fiat money, whereas in the developed world, there's not that much incentive. When you look at the cross-border payments, for example, in Europe, is not that high. So the necessity for a stable coin, a stable European-based stable coin to be settling money is not that high, as when you compare to connecting the world, Latin America, Africa, all together, and Asia through a US dollar denominated instrument. So it varies, but net, I see it happening 5 years time for sure, even shorter.
Axel?
Yeah, I think we still have a few. I fully agree with all that what Juan and Andrew said. I think there are a couple, for some of these use cases, a couple of challenges that will probably slow down mass marketization. Like, for example, privacy. I do believe that's like treasury management for a company or invoice payments. I think that a company will be very careful at having their own treasury on a public chain fully transparent, because then suddenly their competitors will be able to know, oh, why did they send $2 million to their Brazilian entity, or why did they pay $2 million invoice to that supplier, and how many of these products did they? So they probably pay. So there's a lot of information and that could be gathered from this flow of funds, and same for like when. At one point, we hope we'll be able to settle the card transaction directly from the buyer to the seller. But the merchant really interested in having someone being able to witness how much money they earned that day? So there are a few things where privacy might be a challenge. Fungibility is another one. Even as a consumer, you probably don't want to have 10 types of different dollars or 10 types of different euros in your pocket. But I do believe that we see more and more use cases, more and more fintechs using stablecoin just as a hidden layer for more efficiency, and people just have dollars in their fintech application, even if it's stablecoin behind the scenes. That's definitely happening. But there are a few like technical challenges that we'll need to fix before it really embrace. But I completely see a world where a lot of these movements and payments are just using the most efficient and the fastest way of paying internationally. That's for sure is happening.
So adding friction back in for various reasons. Jess, final word?
Yeah, I mean, I think most things have been said, but not by me. I think efficiency is key here, right? So what users, whether they're business users or consumers, care about is like the form factor. How, like, what am I using? How easy is it for me to use? And what things does it give me? I choose to buy my travel usually on a credit card because I get my chargeback protections and I know that I can call somebody. I'm very happy to make a crypto payment for something that I receive in real time because I'm probably not going to need to do a chargeback. I like using crypto for doing expensive cross-border transactions because it's really fast, but actually just paying on my regular Visa, for something small locally makes sense. So even I, as a single user, use different form factors of money every single day. And do you know what I don't care about is what technology is underneath most of them. I really don't care that my card payments go through ISO 8503 messaging, nor do I care that my bank payments go through SWIFT. And I think that's the reality here is we have to think about what the end user wants and what we're providing them as a product and how they can use money as a product. And underneath, the efficiency game will be what will win, notwithstanding that we need to solve a lot of these interoperability and privacy. I think you're 100% right, is the big barrier. But ultimately, I think that the end state will be that almost all money will move on these rails. We might be 50 years out from it happening, but I think that will happen. But as end users, probably most of us won't and don't need to know what the rails are.
Yeah, I mean, I agree, but just when you were saying that, I was thinking I completely agree, except when I send money to myself from one bank account in one country to a bank account in another country, it gets blocked, but via stablecoin, so it gets blocked, or it's in an evening or a weekend and suddenly the banking system can't accept it the next day. And then you really do notice the different technology, right?
100%.
And you get really, well, I get
But I would argue that what you're noticing is the form factor of how that works rather than the technology itself. Banks, if they wanted to, could run 24/7. They just don't want to.
Yeah. It's a question of level of service. If you provide better service, people don't care if it's what technology is underneath. They just see the value and the service you're providing. And there is a lot of value provided by faster 24/7 instant settlement.
Yeah, I was about to get anti-bank, but then I realized we have one on our panel, and I don't want to be rude. But look, we've come to the end of our time.
Take longer than a minute to respond. So.
You can do it in 8 seconds. I realized we haven't really, we just touched on the decentralized economy bit of the title, which we otherwise ignored. But I think that's okay because actually, well, at least for me, the interesting bit right now is the building, what's happening, the products, the services, the adoption, rather than what all that means. Maybe that's something for the future. But thank you very much to everyone on the panel. Please thank everyone on the panel. And pass back to...
Thanks.